Hello and welcome to NDTV Profit. We're doing an earnings review with Lupin, and joining us today is the Chief Financial Officer, Mr. Ramesh Swaminathan at Lupin Limited. Welcome to the show, sir.
My pleasure.
Lupins reported a great set of numbers. Profits have tripled. Margins have come in strong at 19.97, which beats both the street estimates as well as the target 18% that was suggested by the management for the year. Revenues and profits, EBITDA up to highest quarterly sales numbers. So, sir, coming to you, the margins have been great. How are we supposed to look at them? Almost a 20% number, and what would be the guidance for this year close and the next year?
Yeah, a good set of questions. So, firstly, from our perspective, pivoting to the complex, molecules has really helped. So essentially, if you look at the US markets, so you have both Spiriva and Albuterol. That's really helped. And essentially, if you look at EU also, it's we have Foster and the like as well. But more importantly, there has been secular growth across all our markets, including India, where the productivity has really paid off. We added about 1,000 odd people in the last quarter of the last fiscal. So that's really paid off. So from our perspective, whilst there is a lot of room for optimism, given the current trajectory and the like, and there are, of course, other, all of this will certainly continue from our perspective. But there are also negatives in terms of potentially disruptions because of Red Sea related issues, because of air freight going up and the like. So you'd like to play conservative in that sense, right? And I would say anything between 19.5% to 20.5% in the quarters to come would look pretty good for us.
That's a great target, sir. So if you could help me understand and break this down. So like you mentioned, the India geography did well. On the domestic front, Lupin, I think overall India pharma market is suffering from low volume offtake, and that was also something that was being discussed about Lupin. Also in terms of the new products that have come under the essential medicines list. How are we to look at that? Is it that those things don't matter to us anymore? Are we in line now? How do we look at the India business?
I think, what you asked a very appropriate question. Insofar as the Indian market itself is concerned, so in a general sense, if, about a third of the overall growth comes in from volumes, a third actually comes from new product introductions, and potentially a third from potentially, price rises and so on. And last year and this year, if you look at the next year, for example, the wholesale price index, in fact, it's virtually at the same level. So to that extent, and there's not going to be a price adjustment. But I would expect, in fact, volume plus, in fact, the new product introduction to be in the range of about 6 to 7% for us at least. And overall, given the fact that the non-NLEM portfolio, there is, of course, an increase that will contribute. So from our perspective, if the industry growth rate is about 8% or something, we would expect to be at least 30% higher than that. And that's, in fact, been our past, and that's the way we would see it in the future as well.
So that is great. And on the US front, the business reported a strong growth of 24%. So just trying to break this down, does this have a lot to do with Spiriva, or what is the growth in the business excluding Spiriva?
We don't talk about product, wise numbers as well, but you'd appreciate that the conversion rate for Spiriva, insofar as new users are concerned, is close to about 30%. It's still a growing molecule, and of course, last quarter, second quarter is when we actually introduced it, and to that extent, there was some channel filling which happened. Third quarter, there's obviously some reduction because of that. And overall, if you look at the generic market, generic turnover that we achieved out there, it's a 212 mark. It's about the same level as the previous quarter. Our run rate, given the stickiness of the overall portfolio in America, we expect it to be around the 200 mark, going forward. And that is there to stay. But having said that, we have a very rich portfolio going forward. So if you were to fast forward to 3 to 4 years from now, a large chunk of our portfolio will come in from respiratory, from complex injectables and the like. And of course, not to speak about, in fact, our impressive OSD portfolio itself. And from the current $800 million turnover that you're seeing, it could well be about $1.25 billion.
So if you could throw some more light on this launch pipeline that you're talking about in terms of when and how this will play out.
A host of molecules on the complex injectables front and, of course, on the respiratory front. Um, you know, um, Virtually everything which which is there in the respiratory space, you would actually be developing those, over time. And on the complex ones, we have quite a few things, for example, we have glucagon and we have risperidone consta and a host of others that we would potentially be that you're working on. Risperidone consta, of course, you've already made a submission. All of this will come to fruit. And if I fast forward, I would say about 250 to $300 million of turnover would come in from complex injectables. Equally large chunk would potentially come from respiratory, and the balance from the OST portfolio.
Okay, so and would most of these launches be in FY25 or it be towards the end of the coming year or FY26?
I'm saying all of this will be spread over time. I was speaking about a time frame of between 25 and 29.
Okay, sir. Thank you. And sir, in terms of the geographical mix, ROW and EMEA, both of them showed a very, very strong growth year on year. So are we also looking at expanding more into these geographies in terms of the geographical contribution to the overall revenue mix? Can we expect some shift?
The EU this particular quarter has done pretty well. As I was saying, it is also thanks to, in fact, the respiratory portfolio, pecloformitrol, which we introduced in UK. We kind of are partnering with various other partners and companies to kind of help in distribution in Europe. We of course have Homosan as a vehicle in Germany itself, and that's done a tremendously good job. And given the richness of portfolio for these markets, we would lever the same portfolio, the same respiratory portfolio across various markets, what we have for America, into Europe as well. I would expect, in fact, the turnover and the growth rates to sustain in these parts as well. But equally, these are portfolios for our other geographies as well. So we're pretty confident about secular growth rates in various markets. India, of course, we added, it's of course going to be a mix of, feet on the ground plus higher productivity, plus, of course, the portfolio that we're bringing to the markets and the like. So, from our perspective, I think there's a lot of reasons for optimism in terms of growth.
Absolutely, sir. And my last question would be on something that you'd already mentioned around the Red Sea issue and that you're seeing a hike in terms of freight. Is there any impact on raw materials, supply chain, and overall, if all of this were to continue the way it is, what is the sort of bump that you would see in terms of costs?
There would be impact insofar as cost. Air freights, the freight costs have actually gone up by about 30% and so on. So people are actually going down the Cape of Good Hope in order to actually, avoid that and so on. So all of this really costs some monies. I'm not saying that this is actually going to derail the business tremendously, but one has to watch out. We are cautiously optimistic, at the same time pretty diligent about what's happening around us.
Thank you so much, sir. It was a pleasure speaking to you.
Thank you.